many thanks for joining us and staying to BloombergQuint. Interesting times for the commercial vehicle space as well. I want to get your brain on, we are seeing some sort of recovery. We're seeing some sort of momentum industry-wide. Is it in line of what you were expecting, or you were surprised with the kind of recovery that we have seen? And where is the industry heading from here on?
Thank you very much, Nishant. First of all, a very happy Diwali to you and your viewers. I think we are in the Diwali week, so the festive mood has started despite COVID. Good to see the cheer. I think when this whole COVID thing started in the end of March, early April, we did three things. One was to look at safety of people and all our associates as well as our dealers and suppliers. The second one was to augment liquidity, which is why, with the support of banks, we were able to draw on loans and then keep a lot of liquid cash for the company. The third thing was to actually, do a forecast of how will the company and the performance of the company look, as well as the industry look, if COVID were to continue for 2 quarters, which is exactly what has happened. So, to a certain extent, while I would say that the volume growth has reassured us that our estimates have been good, we are expecting that the second half could be better, much better than the first half. If you look at the estimates of analysts as well, Nishant, if you look at that, you would find that most of them are expecting that the industry would actually post a negative of about 30 or 35% over the previous year. If that is the case, Q2, Q3, and Q4 need to be good quarters, because as I speak to you, the overall industry is down by 75% over the previous year. So we are reasonably optimistic that Q3 and Q4 should be good quarters, provided the COVID impact starts to wane. There is further infra investment by the government, and core industries such as cement and steel and other industries also start to grow.
Where are you seeing the demand coming from? Are these the large fleet operators that are driving demand, or the segment as well, which is driving the momentum?
Well, actually, what has happened is after GST, Mr. Nishant, what has happened is we have seen the industry getting trifurcated. So you got long haul, and then you got intermediate commercial vehicle, and then you got LCV. Let me start with LCV first. LCV actually has been least impacted, and for us, we are at almost 95% of last year's volume, especially after the introduction of Bada Dost. I wanted to step aside a little bit and give the strategy of the company. We pursued with our product launches as we have done in the past. Even in 2013-14, we had a slew of product launches. We continued with the same strategy. We had a launch of the Avatar range of India's first fully modular vehicle, MHCVs, and they have gone down very well with our customers in terms of fluid efficiency, in terms of performance, in terms of drivability, etc., on multiple parameters. The second one is that in Q2 we launched Bada Dost, which again has actually brought in a new tonnage into our portfolio, which is from 2.25 to 3.5 tons. So for us, it's a new slot that has come in, and that is going to help us to shore up our market share as we move forward, even in the current year. Both these vehicles, both MHCV Avatar is a range of vehicles. Bada Dost will be a range very shortly. Both these platforms are doing exceedingly well, and we are hopeful of that. Riding on the back of that is the trifurcation that has happened, where we've seen ICV growth happening and also LCV growth happening very well. And if that were to continue, and that continues with MHCV, we would actually see that the performance on all three sectors should start to improve, which is what is the expectation as we move forward into Q3 and Q4.
What about the replacement market? Is there any momentum there?
See, I think the replacement market is also kicking up, but the point is like this. The funding availability for the large fleet operators is much easier than the first-time buyers and first-time users, because we are just coming out of a moratorium. So finance companies and banks, who form the lifeblood of this entire industry, are also watching to see how is the performance of people who have availed moratorium. Thankfully, the general trend has been that the people who had availed moratorium have started to repay their dues, and the promptness of payment has also started to improve significantly. So this is encouraging both banks and NBFCs to kind of reduce their caution lending to this sector, because this sector is an important portfolio for both banks and NBFCs. So they cannot afford to ignore this. Maybe they are tweaking the loan to value a bit. Maybe they are looking at first-time buyers, first-time users slightly differently. But I think as the industry starts to grow and the confidence starts to pick up both from the customer end and from the lender's end, we will actually see things, kind of improving significantly. The second part of it is on replacement demand itself. You see, what is happening is today, we are in a very evolved technology called BS6 as far as emission technologies are concerned. You cannot have a country which can have BS0, BS1, BS2, BS3, BS4, and BS6 all running together.
Right.
So at some point in time, you will see that there will be an automatic phasing out of the earlier, emission technologies, especially maybe up to BS2. I don't know, maybe part of BS3 also, which has happened in cars, which has happened in motorcycles, right? The technology itself is different, and today the vehicles are more sophisticated. And what is more important is the entire model of, freighting has changed, right? And end customers are looking at on-time, in-full deliveries. They are looking at, shipment times, just-in-time inventory. So they would require a lot more information on where the vehicle is located, where the shipment is located. So there's a lot of finesse that has been brought into this entire trucking industry. If all of this were to continue and continue faster as we move forward, we would actually see replacement demand happening automatically. And this will be aided by a scrappage policy if the government were to introduce that.
Yeah. How much of the demand will be brought back, will come back if the financing issues are sorted to some extent? We are seeing an improvement, but how much of the demand is also stuck because of the financing issues?
I would put it this way. You see, one of the most important, there were two things. There was uncertainty in financing, and there was also uncertainty in the basic core demand. So if the government were to continue and step up its investment in the infrastructure as it's promised to do, it has laid out its Atmanirbhar project scheme program. So if it were to continue with that, and we have also seen a smart recovery of core sectors like steel and cement, and we are also seeing possible chemical industry. Then, if all of this were to start, frankly, with the amount of transportation and combustion that would be required, oil and gas would also start recovering, which is again a core industry. E-commerce has, of course, done wonderfully well because of COVID, and that has increased the demand for both LCVs as well as ICVs. So if these sectors start to step up slowly one by one, you would actually see the demand coming back. Now, to gauge it and say exactly what the volume terms would be in Q3 and Q4 is something we are not able to predict. We are still doing it on a monthly basis. We are getting a lot of feed. There's a lot of intelligent information gathering from the ground level back to us. And then we start the production schedule. And one thing that we will not do is to push vehicles into our dealerships. So we are very clear. We are monitoring the level of retailing that is happening and seeing whether the demand is picking up at the retailing. And that is the strategy. And one more thing that can go well for the company, particularly in terms of a market share, is the stepping up of demand in the South. Typically, South demand steps up in December, January, February. If that happens, you will suddenly see that this overall ratios in terms of northern markets and southern markets will actually stand in our favor. But again, I want to tell you that we are truly pan-India today. If you look at last year, our market shares have been pretty spread out in North, East, West, Central, and South.
Is the supply chain ready to meet the increased demand as well? You're seeing some momentum pick up.
We believe so. We are in active engagement with the suppliers. See, they are also facing the same challenges, right? So, the established suppliers can actually ride out the tough waters very reasonably well. But the smaller ones are the ones we need to support, and we're supporting them quite engagingly, ensuring that they have their paychecks in time and that they are having the liquidity in time. So that they are as crucial as the large suppliers. Every supplier is crucial to us and is a partner to us. So it's very important. The same side on the sell side, the dealers are also crucial to us. So we keep monitoring the level of inventory, whether the banks are funding them or the NBFCs are funding them. Are they getting adequate funding to ensure that they are able to hold on to an inventory? But at the same time, we are very clear that they should not hold on to an inventory beyond a minimum stipulated time. And if the tertiary sale, this retail sale does not happen, we would like to then shift the vehicle to some other dealer where the vehicle is required, so that the burden of holding on to inventory is not there for our dealers.
But besides liquidity concerns, are there any other issues that are maybe hampering the capability of suppliers? Besides, or that's
no, I think the COVID moment is still not 100% true. See, that is the most important. Liquidity is the lesser part of it. I would say that the COVID moment is still not there. You see, so you do get sudden bursts of associates of people getting infected due to which the production line can get infected, and then after that again it revives, right? So people are also, the whole thing is about building confidence in oneself that COVID is something that is there, but which will get cured, and something that we'll have to live with in the interim is going to be important for people to understand. And at the same time, we have to take all precautions. So in all our plants, we take all the precautions that are necessary to ensure that there is adequate distance. See, all of this also has impact on productivity, right? So we have to neutralize productivity through other means, because this, I mean, neutralize the impact on productivity through other means, which means we need to ensure that, when you have social distancing in a line, and then there are shift chains, and then social distancing even in a place like a canteen, we have to ensure that the timing of inflow and outflow of workers, workmen, supervisors, managers, everything is done very, very efficient.
Right. But with second wave of sort of a new wave of virus coming in, we're seeing in Delhi as well, the cases have gone up. How worried are you of whatever momentum that you've seen? Could that further derail it?
We are waiting and watching. Hopefully, what we are hoping is that this will not happen in India in the same way it has happened in Europe. And we are hoping that this second wave that has happened in Europe, is a different phenomenon, possibly because their social distancing and safety norms were different from the ones that we adopted. We had a longer play out of lockdown in the initial phase, whereas they did not. So hopefully, that's what we are hoping. While I did notice that there is a second wave of infection. But the other thing is that while the level of infections have gone up, the level of cures also has gone up significantly. And I think the medical system is far today more capable of handling this situation today, because they have understood the treatment that is required. And I think people have also mentally gotten used to it that COVID is not something that is that is to be excessively worried about. Of course, it's not something that one would want to get. No disease is something that anybody would want to get. But I think the mindset is also getting changed, and that's why you're seeing malls getting opened up, shops are getting opened up, cinemas are getting opened up. And I'm hoping, this is at the moment, hoping that the second wave does not hit us.
Right. And what about inventory levels? What kind of inventory levels are there right now at the dealership?
Nothing very significant to report. I don't think there is anything at all. Right? Less than a couple of thousand, so we're not really worried about it.
Do you expect any revival, or what do you expect from the festive now? How is the festive sale?
Hopefully, we are seeing that the demand post Diwali should go up, and that this will continue into Q3 and Q4. That is the expectation. I think that will ride on the expectation of ultimately, commercial vehicle is, I keep telling it in very simplistic terms, is that especially trucks, they do nothing but transport GDP. So what is going to be important is that, the industry revives, the core industries start to revive and post growth, and so does the infrastructure investment by the government. It has to be an investment-led growth for economy to catch up to its, previous levels. And I'm sure that we will do that.
And last two small questions on bus segment. Yet to pick up. We still don't know when it pick up. How worried are you? Because it's an important segment for you, and you enjoy a larger market share as well.
Well, on a lighter note, let me tell you, worry is a useless emotion because it does nothing. But we are waiting and watching. On a serious note, we are looking at how this whole bus thing is going to play out. First, as you said, the bus demand was completely impacted by COVID directly. No transportation. And then who are the major users of buses? The first one is state transport undertakings and private transporters. The second one is schools. The third one is corporates who have to transport their staff and workers. All of them suddenly did not require buses because it was all on lockdown. Things are opening up a bit, but I think they're still far, far away from normalcy. So the degrowth in buses has been quite steep. But I think a lot of this is going to I'll tell you one thing. Let me put it this way. As far as buses and other aspects of the entire demand is concerned, there are two things. One is the COVID and post-COVID. And the second part is how much initiatives will our entire system take to drive up that demand post-COVID. So COVID is something that we all will have to live with, and we'll all have to pass through. So I cannot outguess COVID. What will happen if there is a second wave, etc. What we'll have to do is in the meanwhile, are we building the resiliency of the company, which is what we have done in Project Reset, where we have looked at bottom line enhancement measures through volume, through revenues, through value engineering, through cost, and through liquidity. Now, while we're doing all of that, when the COVID vaccine gets invented and gets distributed, and COVID is kind of linked, hopefully, in stages, then we should ensure that as a country that we are able to ride out the storm and come out more effectively than other economies. And if that happens, I still believe that this will have a very positive influence on commercial vehicles.
Right. And lastly, I'll merge two questions into one. On the guidance for the capex plans are concerned, any revision on that? You have roughly, but if I'm not wrong, 750 crore capex plan, and also club it with the EV story. You mentioned, I think, a part of that investment will also go for the EV plans. Where are you on those plans, and when can we see anything substantially coming out of it?
No, the 750 crores is, we are still sticking on to that, and we will continue. I think that we should be able to maintain that. We'll have greater visibility in Q4, because what is going to happen is, let's assume that the growth is really steep. Then we need to ensure that the company has built the capabilities for meeting that growth into the new year as well. We can't say, no, we have kind of set 750 and we'll have to stop it there. Maybe it may not be even 750, it may be a lot lower. But I think we will take a more calculated guess as we move forward. Not that we don't know, but we're kind of waiting for the COVID thing to play out. As far as what shall we say, the liquidity of the company is concerned, I believe that it is, its debt levels have come down by nearly 1,200 crores in Q2 to about 3,000 crores. Our debt equity is 0.45. So we are reasonably well placed and very comfortable from the balance sheet perspective also. So if there is a need for any capex to be done, we'll do that. But at the moment, we are at 750, and as on September 2020, our overall capex spend has only been about 290 crores. So there's still some distance to go.
Nothing on EV yet?
Well, EV plans are on. I think we have a much larger EV strategy that we're looking at. From the company's perspective, there's a lot more focus that we're trying to build. But at the moment, while we will continue to bid for EV, we are also looking at how to make this entire thing, because we are predominantly a diesel company. But you will hear from us, in the medium term shortly.
All right, sir. It's a pleasure speaking with you. Really appreciate for your time. Thank you so much for listening to BloombergQuint. Happy Diwali.
Thank you. Happy Diwali to you and your viewers as well. Thank you very much.
Thank you, sir.